You've done some incredible things in your life, but it all kind of has to start somewhere.
We're thinking, why hasn't someone done this before? Are we missing something? Because this seems like an obvious solution to a big problem.
We should absolutely be encouraging businesses to take on the world, but why can't they take on the world from Australia?
We've essentially gone viral because of a virus. We saw daily sales double one day and then 12x the day after that.
Hey everyone, welcome back to another episode of People Building Businesses. Today I'm very, very excited to have Richard Joffe, the founder and CEO of Honey Insurance, which is reshaping the home insurance industry. Richard is a serial entrepreneur with an incredibly impressive track record. So I'm very excited to have him here. Richard, thanks for being on the podcast.
Of course, my pleasure. Nice to meet you guys.
So I'd love to start by understanding your history. You obviously don't sound Australian. I'm guessing you've come from another part of the globe. So could you talk about, where you grew up and maybe a bit about your upbringing and your early life, I guess?
Sure. I grew up between South Africa and Canada and moved when I was, kind of just in high school or so. And my dad's an entrepreneur. My grandfather was an entrepreneur. So I suppose not in the way we define it today. I think in those days it wasn't so cool. It was really just a businessman. And but they started a bunch of things and launched a bunch of ideas. And so I definitely grew up learning through osmosis, I think. At the dinner table, all the ins and outs of things that we would take for granted, I think. And I went to business school in Canada, and a lot of South Africans had moved to Australia. So I went to UNSW, like 50% of the current population of Sydney, I think, originally came here as students or backpackers. So I'm guilty and foul of that. And so I came here and really loved it, but ended up going into the corporate world and spent some time in New York. I was a banker doing tech M&A, and I worked with a company called McKinsey. And I was meant to go to business school and keep going on that track. But I've just always been a really passionate entrepreneur. I've been starting things since I was, probably 13 or 14 years old, honestly, from patents when I was 14 down to little rinky-dink startups that nearly got me kicked out of university at 18, 19. So, I had no place in the corporate world. I was average at best there, if I'm really honest with you. And so I realized that wasn't really my calling. I wanted to create things. I hated being told what to do and doing something that's not rational. Like that feeling where your boss tells you to do something, it doesn't make sense. It literally killed me, soul destroying. And so I was like, I don't want to do this. Why go to business school and come back to a job I don't love? And so I started my first company. I was actually in Sydney. I was at McKinsey at the time on a 1-year kind of exchange program, so to speak. And I started my first company here, and that led to a second eventually, and now a third. But I think a lot of my upbringing was, I think immigration and coming from an entrepreneurial scrappy background. It kind of gives you a lot of the foundational tools to realize that, you're okay with a low baseline. Like I think a lot of people cook up ideas in their head around, you overemphasize risk, so to speak. And I think that if you've had to struggle before, I think a lot, then you realize there's just like infinite upside for very little downside. I think we're designed as human beings typically to, avoid getting eaten by the lion rather than winning the lottery. And so I think, we constantly greatly overestimate downside and greatly underestimate upside. And I think that's why a lot of people, I think, that are very successful entrepreneurs, not all, but a lot of them come from, middle-class families. A lot of them are immigrants. They're people that understand that it ain't so bad. Like the whole thing could collapse. You get a job, you can be just fine. And so I think I'm very lucky to come from that background, right?
Yeah, that's incredible. I mean, it's interesting that you went from, Morgan Stanley in your investment banking background to McKinsey as a consultant there to being a startup founder, because for a lot of people, getting a job at Morgan Stanley or getting a job at McKinsey is kind of like the pinnacle of the career. So I guess, what was the light bulb moment for you as you were working in these companies to kind of go, hey, it's time for me to jump out and start a company?
I think there's two parts to it, right? I mean, the first part for me is when I looked up at the people in those big companies, I didn't look at people that I wanted to be like when I was older. So when I thought about, what I aspired to be like, conceptually, I like the Richard Bransons of the world, or the Gateses, or those are people that I looked up at, or even people that hadn't made it, by the way, but people that I really try to create things where I looked up at them and was like, wow, wouldn't it be amazing to be a little version of that, right? And I looked up at the partners at the banks and all these places that I know are portrayed as being so sexy. And I thought to myself, gosh, do I want to like go to Harvard, go back to these places? Like, is this that's not the future? That it didn't feel right for me, I think is what I'm saying. There's nothing wrong with those things, but for me, it would have been, it wasn't what I aspired to do in my life. And it wasn't who I looked at myself as aspiring to be like. And so I think part of it was when I looked up at where my life could be in 15, 20, 25 years, it wasn't like a trajectory that I would have said, oh my gosh, if I did everything right and accomplished that professionally, I'd be so proud. I'd be so happy. You know, the pinnacle of that brought happiness to me. And then I think the second is that I just think sometimes you have to go out there and try a lot of things to realize it's kind of like elimination more than it is finding something. I think that for a lot of things in life, and I think it can be anything from dating to friends to your career, but I think a lot of it has to do with figuring out what you don't want more than what you want. I think very few people wake up and go, oh, I've always wanted to be a, you know, fill in the blank, right? I know that this is what I need in order to have a healthy relationship, right? And I think a lot of it comes like you go through these different experiences and you realize you're like, yeah, big companies, not so much. So it's a small company. Okay, now I need to figure out if I should start this small company, join it when it's on a growth trajectory or when they're kind of late stages because I need structure. Okay, and so you kind of go on that adventure, right? And then you go, okay, I like the growth part in smaller companies, but you know, I'm not sure if I'm loving this engineering thing. Maybe product's more my thing. I want to be seeing customers more. You kind of, and so I think a lot of it is really by kind of going through these experiences, you realize like what doesn't make sense for you, I think a lot. And so for me, that's how like a lot of these things ended up playing out like that, right?
Yeah, process of elimination. That's great advice. I mean, so your first company was Park Assist. You've created the first parking sensor network, which basically eliminated the stress of finding parking. Where'd you come up with the idea?
The idea, actually, the original incarnations existed elsewhere. The idea of these green and red lights that shows you where to park your car, that had existed maybe for a decade, really before, but it never really taken off. It existed in Europe. And so the idea originally was just simply bring it to Australia, frankly, put a bit of a software layer on it and put my own brand in it and call it a day, and then sell it to some of these bigger companies. Obviously, that was incredibly naive given the complexity of building tech startups. You know, I thought I'd be done and rich in 3 years and on to my next one. So there were many complexities, but long story short, you know, Australia was a very small market. Within 18 months, I'd left and went to the UK to start building an office in London. I mean, it's infrastructure, right? So you're selling technology that costs $1 to $3 million on a 5-year sales cycle, trying to make it a 2-year sales cycle with an oily rag and 150 grand, you know, drawing a salary out of that measly oily rag. And so that's a very, very hard, you know, problem to solve, I think. And, you know, and when you're young, selling infrastructure ain't that's hard, right? Like you're competing with the Siemens, a complex solution selling to these very large organizations, procurement machines, like it's hard. And so I ended up in the UK and doing a whole bunch of deals, but I realized very quickly the business wasn't going to go anywhere unless we could really add more value, because if we were just going to sell these green and red lights, you know, Chinese companies would dump cheap hardware and equipment on the market in a similar way. They pump it through distribution channels that were selling more than one product. It would just end badly. I kind of saw the writing on the wall. And so I eventually started, my idea was to create a wireless sensor network. I was actually walking through a car park, a Tesco car park, literally at midnight one night coming home from work. And there was this guy walking around the car park, putting all of the license plates into the car. It was maybe 10 p.m. or something. And I said to him, I'm like, what are you doing? And this guy said, well, you're not allowed to stay over 2 hours at Tesco because you get a ticket, right? Everyone would park their car, leave it overnight, do it in the morning for work. And it's expensive everywhere. No one would have parking spaces to go shopping. So I walk around every single 2 hours, literally, and I give you tickets. And I'm talking like, you know, 150, 200 pounds, right? Very expensive. And so I thought to myself, this is crazy. What if you just put a sensor in the ground? You gave a handheld device to the dude who's got the shopping trolley, and you don't need the guy walking around anymore. If someone stays over 2 hours, I'll go beep, beep, beep. And the guy with the shopping trolley will go give you a ticket. Done. And that, you know, the human being costs you 60,000 pounds. So if I can sell this thing for 30,000 and make it for 15, I'm in business, right? So I basically went with like literally an empty sensor to Tesco and Sainsbury's and try to convince these guys to give a deposit, which they eventually did. And then we eventually went and engineered that, which started to work, but had huge technical problems, largely in the end failed. The technology, it was another good example of taking too much risk. You know, we took business model, technology risk, and execution risk. Technology never really got there. And so I went back to the green and red lights and eventually had cameras put in. My idea actually was to try, which didn't really work, but my idea was to create almost like an app for infrastructure. So imagine you can buy the green and red lights that show you where to park your car, but then for another $100,000 a year, you could have the first find your car solution. For another 100,000 a year, you could charge more for the best spaces in the shopping mall. For 100 grand a year, you could have security. So if someone stayed, over 8 hours, you'd know what's going on. And so I wanted to try and sell these software apps in a sense to the big infrastructure players, but it was very complex. It worked a little bit, it was maybe 5 to 10% of our revenue in the end, but it was an uphill battle trying to sell software effectively to procurement departments that want to buy once off. But it did save the company. I moved to New York, and we turned the company around, and I built it up to profitability, sold it to kind of a big public company in the end, and happily ever after. But certainly nearly died 100 times between start and there, right?
Yeah, and you built it up over 8 years as well, which was an incredible amount of time and dedication for the company.
Well, I think it's normal. I think it's a complete illusion to think that you can. I think you hear of these crazy edge cases. Or people who start companies and sell them in 2 or 3 years. I think, look, you can kind of think of things as well, I think, as being features or platforms, right? I mean, if you're building a widget that sits on someone else's platform, right, then sure, you can sell it to the platform, right? That could be anything from Facebook to Google to whatever, but you can sell it to that platform pretty quickly, right? But if you want to build a company that really matters at scale, it's super hard. I think it takes at least 3 years to be out of the woods where no single phone call could be existential and kill you. And where you just sleep at night. I mean, I think it's 3 years to sleep at night. And then, by the time you get to 5 years, okay, now you've got a real team, you've got your trajectory, maybe you're profitable, right? You're not going to sell before you're 7, 8 years. And then you stick around for another year or two, like you're in for a decade. And so I think you see these extreme edge cases. It's almost like reading about the one person, who choked on Cheerios this morning, right? Rather than 999,999 that just happened. You can see these crazy edge cases, but I think the reality is that the vast majority of time, you're either dead in a couple of years, right? And if you're smart and work hard, you're not going to pack up your toys in 6 months. So you're going to fight it out for 2 or 3 years, right? To death. And if it does work, then it's a 7 to 10 year journey, right? And that's just fine, and you should be happy with that. But I think my journeys were largely consistent with, I think, the norm rather than anything unusual.
Yeah, and you mentioned a couple of times that the company was close to death, or the company was in trouble. I mean, how'd you make the decision to continue rather than cutting your risk and starting over fresh?
Yeah, I'll tell you how I felt about it, and obviously, I think I've learned a lot since I was in my late 20s and all that, right? But I think, at the time, I think I was just desperate, if I'm really honest with you, right? I mean, I was living in America, like, I have to earn my own inheritance, right? Like I wasn't, like there was no fallback position for me. So I was kind of on my own, whether I was in London or in New York. I'm not from there, so I was quite literally by myself and having to figure it out. And if it fell over, I would have been bankrupt with no real infrastructure or support in a foreign country. So it really wasn't, like, failure was not an option, and whatever that meant, right? I mean, that could be literally 100, 120 hours a week for, I don't mean weeks or months, years on end, right? Like there was no end to what I would suffer to make sure it didn't fail. So I think when you're desperate, you get creative, you get scrappy. You don't mind ending an interview that doesn't work in an hour and 10 minutes. You're just like, you're on next. You don't have the luxury of like moping around and feeling sorry for yourself, or that investor didn't call you back. You just like, that's lovely, like if you have the luxury. But if you don't have the luxury, and it's not on the table. And so I think part of it, I never really contemplated the idea of it not working. It would have just been like, it was a foreign concept. In all of my companies, in all honesty, I've never really contemplated true failure. I mean, I've expected that it's going to be incredibly hard, but I've always assumed I'd figure it out somehow in the end. I think as I've gotten older and a bit more mature, I've realized, I think what I realized in my first 2 companies was that, like, one of the most important lessons I've ever learned is that it's better to be average in a top quartile industry than the very best at a bottom quartile. right? And it's like literally one of the most powerful pieces of advice that I learned when I was younger and selectively decided to forget, right? Because it didn't suit me. And parking and infrastructure is not a great industry, right? Long sales cycles, extremely expensive. You need multiple products to make it make sense selling to the same human being at the airport. It's just, this is my second company, was again in recruiting and HR. Again, everyone did great, it worked out, but it was in spite of that. We were best in the bottom quartile, right? You're selling HR departments, like it's an unsophisticated department that's not technology enabled, right? You're not selling to CTOs or CFOs or CEOs, right? It's a cost center, so anything you're selling has to displace humans. They don't have extra budget, right? So if you think about the space you're going into, you can have the most whiz bang idea, but the reality is that if you're going into a bottom quartile industry or a poor industry, do you want to open a retail store? I mean, maybe you got the best idea, but not a great idea, right? Like you can build anything you want on Amazon right now. And, there's tens of thousands of people running multi-million-dollar profitable companies on Amazon right now. So, do you want to fight with the best idea in a bad industry? And the answer is it doesn't, the data does not support that, right? And so I think what I've learned, I think in this experience was that not that giving up, is acceptable, but I think you don't want to be the victim of a zombie company, right? Like if you're in a company and the value prop's not working and you've spoken to your customers, you have a responsibility to do everything you can to quantify if that will work or not. So you sit down with the customer and you go, look, would you actually give me a deposit for this for this product if I built it, right? It could be an app, it could be anything, a hardware product, anything, right? And the customer goes, no. You go, okay, well, would you do it for half the price? Would you do it if it was twice as good? You kind of get to a spec where they eventually say, yes, I would give you a deposit for 50% of the money because okay, great. Then you're solving a real problem. Like unless they're cutting you a check, there's no way to verify if they just like you or don't like the idea of saying no to you, okay? Like a check is the only true business model validation. And so I think what I've learned is that you kind of go on this journey, and unless someone's gonna cut a check, you really don't know if you're just chasing a dream that no one's interested in. So you have to get as quickly as you can to the bottom of whether or not this idea you have, this problem you're trying to solve, right, really matters to anyone other than you and your friends, right? Because if the customer is not going to pay for it and it's not getting scale, then you need to look around that problem for other problems that could be more painful that they will cough up a deposit for or pay for or take a risk for. And if there's nothing there, you shouldn't be wasting your life, right? So I think what you see a lot of, which I find very sad, is you do find a lot of first-time entrepreneurs that don't have experience, and they go out there and they create kind of these zombie companies where they're synthetically keeping it alive, right? They're smart and they work their butts off. And so instead of making 150 or 200 grand a year in a job, they're making nothing or 50 grand or 100 grand. They're slaving away at a discount effectively. And they're working twice the hours of any normal human, right? And so they're keeping it alive, but they're not really going after a problem that actually makes sense, right? And I think you have to be very disciplined about making sure that you're going after a problem that A, is big enough that if you solve it, you can actually build a company around it, and B, someone's really willing to pay enough that you can make a good business out of that, right? Like you have to be disciplined about the quest for the problem, like that focus, I think, right? And so, and I think I lacked that in the early days. I think that I spent many years of my life in both companies, by the way, both when I started Park Assist and when I started Stella. I think I spent several years clinging too closely to the original problem that I went after. And instead of finding a problem that would have maybe accelerated me 10 out of 10, right? I kept accelerating into a 5 out of 10 because it was good enough. It kind of kept me alive. It was kind of trucking along, and I just wouldn't let go of, like, it was almost became part of my identity, right? Like, no, this is our thing. And it's not. The thing is to build a great company, and it's not to cling to the original solution that you cooked up, right? So I try to become more distant in how I attach myself to problems and ideas, right?
Yeah, that's incredible advice. And you briefly mentioned Stella. I don't want to spend too much time on it, but could you just quickly condense your experience building Stella and subsequently, selling it into a combined, $800 million revenue company? Could you just condense that experience into, a couple of minutes of, starting and subsequently selling that company?
Yeah. So Stella was a really interesting company. My idea there was 99% of people that apply for jobs don't get the job. It's essentially a wasted resource. And, Google would kill to see the people that had interviews at Goldman Sachs, and Goldman Sachs would kill to see the people at Netflix, and so on and so forth. And so my idea was to really hack all of these recruiting systems across these big companies, put an AI system in the middle, and then reroute the labor market and kind of speed up all of their recruiting departments. And so we raised a whole bunch of money, again, all from strategics, which I've done 3 times. I nearly always like to raise from customers effectively rather than VCs, which we can talk about, but I'm very passionate about that. We scaled it. It didn't work originally in the knowledge worker space. So we had over 150 companies, and about 50 of the Fortune 500. I mean, millions. It was working, but there wasn't enough marketplace liquidity. But it did work in the hourly space and in the healthcare space. So it turns out that if you apply to, the post office or a nursing job, your ability to go get a job that's similar elsewhere is much higher than if you applied for a UX developer job, which is statistically. And so it worked in that field, and it started scaling, and and it was a happily ever after in the end. I think I learned a couple of huge things. I think number one, moving industries is far more painful than I gave it credit for. Like, it's easy when you're in an industry to think that you're just going to do another startup. And it really takes 2 years to like truly understand the nuances in new industry. Like, I've done it 3 times now, and it's always the same. So, if you're starting something new, like, don't underestimate of making sure, I think, you pivot around either something, meaning SaaS, consumer, marketplace, or around an industry that, fintech, et cetera, right? Like, your context, your contacts on to be able to raise money, to build a team, to understand the customers. It is enormously painful learning curve, and it's easy to forget that when you're leaving. So I think that was one thing I learned. The second is just the importance of team. I had an incredible co-founder in my second business. He was wonderful to work with. We were very closely aligned. Having a great co-founder can make or break, I think, a business, or be very, very painful. And you want to make sure you have alignment. So my first company, I really didn't have alignment. I had misalignment with different types of investors. I had a co-founder that didn't want to work at all. And the second time, all of them were strong. I had a strong co-founder, I had strong investors who were aligned, et cetera. So I think you want to make sure that people across the board, both employees, founder, and investors, are looking to do the same thing, right? If you have people on the team who want to get 3 to 5 times their money and at all stakes, not fail, and you have other people who want a big vision and other people who want to get out in 4 years, not 8, like, those are inconsistent things that lead to inconsistent decisions and create massive friction. And so I think I learned how important it is to create just ruthless alignment. You have to be disciplined with that, right?
Yeah.
So yeah, those are the big things.
How did you feel after merging the company? Was it a breath of fresh air? Was it a big relief for you, or,
Yeah, I mean, of course it was, just to put it mildly. I think it always is. I was in Australia, right? I got 2 little kids, and I went through a divorce that was very, very difficult, and so I brought my kids to Australia to make sure that they had family around them. And so for me, I was trying to commute. It was incredibly hard. I was commuting back to San Francisco in our New York office with a kid in diapers, while kind of working out at midnight. I mean, it was very unpleasant. And eventually you just, even if you are sleeping 5 hours a day and every minute you're trying to be productive, like, at some point you're a human, right? You can't do that indefinitely. And so, as I said, I had a wonderful co-founder, and we switched roles. So I switched to chairman, and he took over as CEO, and he kind of managed the process and did a wonderful job. And so that gave me the space I needed eventually to start Honey and to really start rebuilding my life in Australia, make a few friends, learn what the stories and all that good stuff, right? But yeah, so it was a big relief, and I'm, most, of course, I'm happy financially, but I'm really happy for the team. Like, they work their butts off, and it gives them a wonderful opportunity to build something really special, right?
Yeah. Thanks, Richard. I mean, moving on to Honey, now your third company, you mentioned that Honey was conceived after you moved to Australia in 2019 on a holiday visa, with your kids, and during what was an extremely difficult time in your life. Could you talk to us about everything that led you down the path of overcoming that period and subsequently creating Honey?
Yeah, when I first came, I spent probably 6 months looking at whether or not to get a kind of a more traditional job. Like, should I, be the CEO of a public company? Should I join a venture fund or start a venture fund as a partner? I kind of looked at a bunch of options, and I spent nearly a year doing that, 6-12 months. And I just came to the conclusion I wasn't passionate about it. And like, I love what I do so much. Like, this isn't even work for me. Like, honestly, I love I just love being an entrepreneur. It's like I'm on the planet to do this thing, And so I really wanted I wanted to build an incredible team, and I wanted to do it in a similar way to, that you can do it back in Silicon Valley, even though I know the rules here traditionally are a little different. And so I kind of made a decision that I wanted to swing for the fences, and regardless of like what the norms were in Australia, I wanted to kind of do it my way if I could, or not at all. I want to raise a lot, go after a big problem, work with a gifted team, and and if not that, then for what, right? And so I thought I'd give it a crack. And insurtechs around the world, I mean, insurance is a kind of top 5 industry around the world. It's massive, and there's never really been much money flowing into it. You're seeing a massive amount of money flowing into it globally now, from Lemonade and Hippo to WeFox to Nextdoor, you name it. And you're seeing dozens, literally, of these multi-billion-dollar unicorns in insurance, and nothing, nada in Australia, right? So you kind of look at that as a technologist, like, what's going on? Why are you seeing all of these multi-billion-dollar startups in insurance around the world and nothing in Australia, right? And so I started digging in. I started looking at the different customer experiences. There's no question home insurance, in my mind, was where the biggest profit pool was. So if you were to look at the biggest opportunity where new technology and services could really improve an experience for a customer, like how do you transform an experience? Home insurance is definitely the place. And I wasn't really qualified to go after the complex things. Like I wasn't going to try to sell insurance to an oil rig or get it to cyber insurance, right? So when you look at those sort of lines, and there's a lot of technology and services today that actually reduce risk in people's lives. So if you think about the way the insurance industry works, like home insurance, for example, the companies, in a sense, are not incentivized really to keep you safer. I know that sounds terrible, right? But the way it works in this country is you buy home insurance, you don't hear from them again. 1 year later, they reach out to you and ask you to increase, typically premiums go up 5 or 10%. They renew, it's usually a text or an email, and that's that, okay? And if you get a claim, the rejection rate on claims, 185,000 people last year got rejected in a claim. So $1.5 billion paid out by people like you and me, okay? Who had home insurance, because 80% of the entire country is underinsured. So the way the game is played is you go online, it's almost impossible to understand what you're buying. They kind of, they give you the cheapest price possible. And so the spec on the insurance is very low, and then something bad happens and you're kind of screwed, okay? But because you only, it's only 6% chance you're making a claim, so be it. That's how this game works, okay? So really the question was, okay, this isn't working for the consumer, certainly. It's working for insurance companies, perhaps. What if you reverse the whole thing, okay? What if you actually invested, and we invest up to $500 into the customers to actually reduce risk in their lives and then pass on the savings to them? It would create this crazy cycle, right? Where the customers are constantly below risk, better off, and then cheaper. So the way it works is when you sign up for Honey, firstly, it's digital, right? So it's 1/3 of the questions, because we plug into satellite footage, we plug into public data. You don't have to tell us what your roof is made out of. We can see from the satellites, right? We don't have to tell us, for example, how many bathrooms you have. We plug into REA and all these other places, right? So how do we use all of this public data so we don't have to ask you to rinse and repeat stuff that you don't know necessarily? So it's literally 2/3 faster to actually buy the insurance. When you sign up, you get $250 of sensors for free. So the sensors can detect if there's a water leak. It can detect if there's movement in your house when you're not at home. And it can detect as well, if your fire alarm goes off and you're sitting in a movie theater, it'll literally say beep, beep, Jason, your fire alarm's going off, okay? So it reduces risk. And then if you put them in, you get an 8% discount. So the message is, Jason, Honey is easy to buy. It's a great home insurance product. By the way, we're going to give you a lot of free stuff. And if you use it, we'll give you we'll just literally transfer the savings. So if people put in these $250 of sensors free, they get an 8% discount every single year that they're doing it. That's what we calculate is the reduction in risk for you, your family, and your life, right? And there'll be other services that we're giving people over time for free that we're kind of building around, which will be released over the coming years. And so the idea was, can we create a company where we're quite literally reducing risk in people's lives, saving lives, saving houses, and then passing on those savings, and everyone wins. We're winning because there's less claims, the customers got cheaper price, and society wins because people are safer, right?
Yeah. What's interesting is that you're using all this publicly available data, which is also accessible by the other insurers. And I guess my question is, why aren't they doing this?
Yeah, I mean, I can't speak to them, of course. I think your question is the same in the US and Europe and everywhere else, that all these billion-dollar insurance techs have worked. I think what I would say to you is these companies, they've been around for 120 years. Most of their software platforms were developed 20, 30, 40 years ago. Like, these are not new platforms. And I think when you're dealing with a highly regulated industry like insurance, other than healthcare, probably the most regulated in the world, by the way, upgrading your platform is incredibly hard, right? You're talking 3-5 year projects. You're APRA regulated, your compliance is incredible. So these companies are almost run by their legal teams at this point, right? They're not thinking, how do we innovate? So to answer your question, I don't think it's big enough for them to care often. Like, if you're a big insurance company, Australia is a part of your business. Within Australia, you have commercial and personal lines. And then personal lines, you've got home. And then within home, you're doing just fine because 4 companies control 3/4 of the market. So, like, really, we're going to spend tens of millions replatforming to what now? Why? It doesn't stack up. And so unless you start meaningfully losing market share, why would you do that? And so I think part of it is that it doesn't make economic sense necessarily to replatform at that scale without a burning platform. To the velocity that they move, they probably will do this stuff in 5, 10, or 15 years, right? And then I think a lot of it is just very conservative. Like, to give you an extreme example, right? Let's say, for example, that you put a whole bunch of information already into one of the online property platforms. Okay? Well, let's say you're filling out a form. Some people would argue, how do we know that it's not Jason's wife that actually put that information in, right? And you go, but Jason's saying that, like, Jason filled out the application. They go, but how do you know for sure, right? Or Jason's saying that he doesn't switch on the sensors. How do you know for sure? And you go, but that seems like higher odds of getting hit by lightning than some of those things, right? But if you're a lawyer in an insurance company or signing off on regulatory, you might not be comfortable using the data, because what if we said that you have terracotta roof, and then Jason now says, but technically I didn't, and then there was a catastrophe, and now Jason claims that we owe him $422,000, not $424,000. How does that flow through to how we actually, deal with our balance sheet? So you have these bizarre conversations that don't make commercial sense, I would say, within some of these insurance companies. They're detached from what customers need, but they're so conservative and so mired in regulatory that it's very hard to be innovative. And then if you think about an existing customer base, you have to retrofit it. So, for example, if you have 2 million customers and you're now shipping out sensors, you have to do that for 2 million customers. Are you going to ship out $250 of sensors to 2 million customers? Now, you don't have to be a math genius to realize that's $50 million. That's an enormous amount of money. And you haven't integrated that yet. You haven't designed other services yet. You giving out an 8% discount. Like, does it really reduce claims, and by how much? Now you got a $1 billion book of business. You're going to discount that 8%. That's $80 million in discounts per year. We're going to ship $50 million of technology. And by the way, who's doing this internally? What now? There's no. So I think when you think about what's required at scale for big companies to innovate, needing to retroactively put this across their existing customer base, it's incredibly hard. It's easier to let little companies like Honey innovate and then buy us or partner with us, right? And I think that's what you generally see. Big companies have a lot of good things going for them, but speed is not one of them, right? And so, we have an underwriter, RICQ, they invested into Honey, and they did that for that reason. And they've been amazing to work with, right? They've said, look, you guys are going to basically be our innovation hub. You're going to invent all these amazing things for people for home insurance. We'd love to be able to learn from you. And we'll give you the infrastructure and the APRA support and all these things that would cost you tens of millions of dollars to build and maintain, right? We'll give you that support. You kind of go hog wild, like figure out what Australian consumers need and what the future of home insurance should be, save people money, reduce risk in their lives, figure out new ways to buy. And we'll give you this infrastructure that's really commoditized in a sense, right? Like, you don't need to know how to do an actual model for catastrophic risk in Queensland, right? Like, that's not going to differentiate you as a business.
Yeah, and they've got all that, so you can focus on the technology behind it and the customer acquisition and I guess the stuff that other insurers don't do. Yeah, I mean, that's a good segue to my next question. Honey launched with 15.5 million Australian dollars of seed funding, which is, according to TechCrunch, the largest ever seed round for an Australian tech startup. I guess there are two things that are interesting about this. One is that, it's the largest seed round ever for an Australian startup. And two, if you look at the investor list, it's comprised a lot of, what you would call strategics, right? It's RICQ, it's PEXA, Mirvac, you've got, Afterpay co-founder Anthony Eisen, Tim Fung from Airtasker. It's an incredible milestone. So, I guess I've got two questions as part of that. One, could you tell us a story about how, you raised that seed round? And two, just touching again on that strategic versus venture capital angle that you briefly spoke about as well, and why you've decided to go down the strategic route.
Yeah, so I took strategic capital in all three of my companies. I'm very passionate about it. I think that, look, venture has its place, of course. But in my mind, I'm very passionate about combining customers, infusing customers into your business, especially early on, because I think it's better for everyone. Number one, if what you're doing makes sense for the customer anyway, in our case, AGL and RICQ and all these other companies, right, Mirvac, et cetera, then why would they not want to help you build it? Why would they not want to be a part of that? And if they don't want to do that, then you need to ask, if they don't want to do that and the venture guys want to fund it, you should ask yourself deeper questions. Like, if they don't really care, if it's not that important to them that they want to buy a piece of your business, then do they really care? Are they really going to work with you in the end, right? Are they going to buy from you? I think to me, it's actually much more existential than that. I think I love going to customers because if they say no, I'm not even, it's even less the investment. If they say no, then I may not want to do this thing, right? So I don't want to start a company ever unless a customer is signing a check, either as equity or deposit. I have like a very hard discipline about that, because the risk is I lose 5 years of my life toiling away on a zombie concept when the problem doesn't exist. And so my first company, I had, the founder of a big parking company, the CEO of a shopping center company. They invested. The second time around, I had Seek. I had 7 recruiting agencies invest in the HR one. And this time, the problem was really underwriting and selling distribution. And so I wanted to make sure that the company was formed of those people around the table so that they could help us figure it out. So every time we hit problems, I could turn around and say, hey, this pricing isn't working, or this direction isn't working, or why is no one buying? And they would tell me why not, because they got their asses on the line, right?
Yep. Absolutely. And how do you go about asking a customer for equity or an investment? That's not something that a lot of people have experience in.
I think that I think it's actually a much easier conversation than, well, it can be an easier conversation than going to a venture investor, although the process is much more painful and longer. But I think the message is really simple. I think this is an interesting problem. If it makes sense, I'd love to raise the money. I'd love you to have a piece of the business instead of the venture investors. Do you think this is a big problem? And what's interesting in that conversation is that customer now completely changes their mindset from, you're trying to sell me something, so I'm going to be guarded, to, okay, well, given you're not trying to peddle me something, let's actually talk about if this makes sense or not, right? And you start to then actually have a conversation where they go, look, I've got to be honest with you. I've been approached 7 times already. The price was 30% less than you said and twice as good, and I don't want any of it because my real problem, Jason, is actually not that. It's this other thing that no one's going to help me solve right now. And you don't know why, Jason, but it's actually that I am being forced to cut costs 40% because in my department, for example, there's all these other pressures going on right now. And I and you go, oh my God. And so I think what you want to try to do is to sit down with customers in the early days and understand where the pain is with that customer, right? And certainly in the enterprise world, right? And so I think the conversation is simply, look, I want to make sure I'm going after the right problem. Is this a real problem, right? And is it, and if it is, am I thinking about it the right way? And if I am, then are you guys interested, instead of me raising the $1 million seed round, whatever it is, are you guys interested in putting in $250,000 or $500,000? And I'll give you a 50% discount, for example, over the first 5 years you use my product, right? But own a piece of the company, and I'll give you a discount for being the first customer, and let's go build this together, right? And I think the likelihood that you build a great company with that formula is infinitely higher, in my humble opinion, than simply raising money from mom and pops, or like if you can't raise from strategic, you go to venture. You can't raise from venture, you go to friends and family and angels, and if you can't go there, you go to whoever you can, right? But the greatest discipline in building a business is doing it with the customer. If you have the privilege of doing that, and I would stop at nothing to find a customer that says, I agree there's pain here. I can't cut a check, but you know what? I'll give you the full $250,000 annual license fee. Give me the discount of 125. I'll take the other 125 as equity. Like any way you can, find a way to ensure the customer truly is on the line, that you're going after a problem that matters and that they're incentivized to work with you as a partner. And if you do that, the likelihood of success and not being roadkill goes up just infinitely.
That's amazing. Richard, I'm conscious of time, so I really just want to ask you just, one or two more questions. Thank you so much, by the way, for spending time with us on the podcast. One of my questions is in terms of customer acquisition. Again, you've mentioned that you're up against, a lot of competitors who have been very entrenched in the market, and you see them on ads every single day. So, what's your strategy for Honey on that customer acquisition path to overcome these current incumbents in market?
Look, I think the good news is that the bad news is that there's big incumbents. The good news is there's big incumbents, right? So my view is that there is no one in Australia that's building a home insurance product that's really started from the ground up to say, how do we invent this in a way that's actually sensible for consumers, right? Where it's a third of the time to buy it, and we're spending hundreds of dollars to help people, and you get all this value-added services and discounts for being safer. Like, how do we really do something special there, right? And so I think the good news is that we expect word of mouth to be a major component. So we're going to go very heavy on digital. We're going to go very heavy on specific communities that we think will start the flash and lead to virality, right? But for us, I think a lot of it will come down to word of mouth and people telling people. And if you think about a lot of people, that, especially like the millennials, right? They're very active on social. And if you're doing a great job for people and just focus on your product, my view is that the average NPS for home insurance in Australia is 6. Meaning this is not a loved industry. Like, no one's jumping up and down saying, oh my God, I love my insurance company. Like, it's not true. The data does not support that, right? 1 in 7 people or something were rejected their claims last year. I mean, this is not a loved industry like that. So I think we're blessed with a fairly average baseline, to put it mildly. Like, most people don't love it. The average person, by the way, pays 27% too much for home insurance. If they literally just called their insurance company back and said, hey, I'm in my same house right now, what do you charge? They give you a discount of 27%. It's called a loyalty tax. They're literally increasing the price because they know that you don't choose to shop around. Like, meaning customers can cancel their home insurance anytime, for example, switch to Honey. But there's been this convenient idea in the market that you have to wait till the end of the year for your policy, which is absolute BS. Meaning you can cancel anytime. They're legally required to give you a refund and the rest. But the insurance companies assume that you won't shop around till the end. You kind of forget, and then it clocks over to the next year, and so you get ream 27% premium. Okay, so we have to try to help people understand that they can absolutely stop their home insurance currently anytime. We have to focus a lot on helping people to kind of switch more easily, which the big companies are trying to make difficult. And we need to make sure that we focus on the product, because that ultimately, product kills everything, right? If you do an amazing job for people, they'll tell their friends, they'll tell their cousins. That's going to be infinitely more cheaper than advertising buses, right?
Yeah. That's amazing. And my last question for you, Richard, before we wrap up the podcast is, what are your plans for the future of Honey and your growth?
Definitely stay in Australia for the next certainly 3 to 5 years. We have no plans to leave the shores, and we want to be spending as much time as we can being a specialist in home insurance, like home contents landlord. We only want to do that, and we want to be like world class at that. Meaning we want to do such a good job that people would almost feel it's crazy to work with a different provider, right? And so we want to be focusing all of our time on how do we create additional free technology and free services for people, where we're getting images, for example, from satellites, and you get a text message and it goes, hey, Jason, we're seeing a leak in your roof right now. You're not going to feel it maybe for a few months. We're just a bit worried. Or that tree looks like it could fall onto your roof. Just maybe check it out. Like, how do we do things that blow people's minds, that really help them in a way, and we want to do a great job of that over the next 3 or 4 years, which is how do we build consumer products that wow people for home insurance and make it proactive, truly proactive insurance that helps you ahead of time, and focus on that in Australia. And I don't think in the next 3 to 5 years we can do much more than that. I think that's a whole company, is my view.
Yep. That's incredible. Richard, thank you so much for spending time on the podcast. Really appreciate it. I've learned a lot, and it's amazing what you've done, truly. So thank you so much.
Thanks, Jason. Nice to meet you too. Thanks for the time.